Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me for the first time on this show, Pierre Lassonde. For most of you who are investors in the mining sector, in the Canadian mines, especially the mining sector, you would know the name Pierre Lassonde. He was the co-founder of Franco Nevada Mining Corporation in 1982, a remarkable company that did extremely well for its investors. Over the 20-year period, provided investors with shareholders in that company with a 36% annualized rate of return. The company was acquired by Newmont Mining Corp. In February of 2002. And Pierre became president and vice chairman of the company, and he served as also on the World Gold Council from 2005 to 2009. And Pierre has a very rich academic background as well, degrees in engineering and law, in business, and a host of honorary degrees, and he is very well known for his philanthropic endeavors, and especially in the arts in Canada. And he is also has been inducted into the Canadian Mining Hall of Fame for some really good reasons, and I'm really pleased to welcome you, Pierre Lassonde. Thanks for joining us, Pierre.
Well, it's my pleasure, Jay, and you've had over the years a terrific show, so it's a real honor for me also to be on your show.
Well, that's very kind of you to say that. I just, you are recognized as one of the pioneers in the royalty or streaming business. It's easy to look back in the rearview mirror now and say, oh, what a great idea. Why didn't I think about it? But you were the one that came along and thought about it. You were one of the leaders, anyway, the first people to put this model together. What prompted you to see the opportunity back in the early 1980s?
Well, interestingly enough, my partner, Seymour, came from the oil and gas business, and we were trying to find a way to be in the mining business without having to raise money every month or, every 6 months. Mm-hmm. And he mentioned the royalty business in the oil business, and we said, well, I've heard of a few royalties around town, but let's see if we could buy maybe one or two to give us some cash flow. But I don't think we can actually build a business out of it. But, let's see. At the time, Jay, we didn't know how big the business could be. I had no idea how many royalties were out there. And as luck would have it, the very first royalty that I ever bought for $2 million, I will tell you, was the royalty that ultimately ended up being the royalty on the Gold Strike mine of Barrick in Nevada. They came in 2 years after I bought the royalty, and then subsequently found 50 million ounces of gold. And so far, that royalty has paid out over $1 billion.
Wow.
I know. My nickname became Lucky Pierre.
Well, it's not just luck, I'm sure, Pierre, but there is always, isn't there, an element of luck in the mining sector. You can have the most brilliant geologist and never come up with anything substantial. And then
that's
somebody
absolutely true. The one thing that I love about the mining business is it's really the only business in the world where with one drill hole you can create $1 billion of wealth. And, of course, it's not every hole, and it doesn't happen too often, but it's happened to me 3 times in my lifetime. And you're right. I mean, I say I'm lucky, I am lucky, but luck is preparation meeting opportunity. Mm-hmm. And so you have to be prepared. You have to do your homework. You talked earlier about, all the degrees that I have, all the hours that I have. I mean, in the book Outliers, Malcolm Gladwell says to be world-class at anything, you need 10,000 hours. He's absolutely right. You need your 10,000 hours. You need to put in the work. And, the harder you work, the luckier you get.
Pierre, I think the mining industry has had a tough struggle for the last number of years, I would say. If I'm right, I think the PE ratios for substantial mining companies has trended lower over the last number of years. Why do you think the mining sector is having such a rough time? What are the economics that are causing gold mining in particular to have such a struggle?
Yeah, the XAU versus gold is at the lowest level I have ever seen him in my lifetime. So that just gives you an idea how unloved the gold stocks are. In my career, I've seen 7 cycles, and what I say to people is that at the bottom of the cycle, there's never enough money in the business. And at the top of the cycle, there's way too much money. Companies are thrown money at. Because the gold mining business is a fairly small business, and it doesn't take that many, millions of dollars to make a big difference. Right now, it's unloved. The U.S. dollar has been sort of the king of the business world, and gold is the anti-U.S. dollar. So as long as the U.S. dollar is very strong, which it has been since 2011, the gold price has been languishing. But if you think like I do that all those headwinds have become now tailwinds, I think that all of the President Trump's, trade policies are fundamentally anti-U.S. dollars. And I think that when you look at the world economy and everything else, I think the U.S. dollar is finally kind of turning around and heading down vis-a-vis other world currencies. And that in itself is will essentially help the gold price starts to move up again.
Pierre, do you think that we need to see an equity market decline of substance before we see a gold price that really takes off? In other words, we need to see gold is so negatively correlated with most everything else that when people suffer, when the mainstream suffers, it seems as though that's when gold has its day. And yet we see the Fed, of course, and as soon as the stock market starts to fall a little bit, we see a hissy fit thrown at the Federal Reserve Chairman, and he has to loosen the strings and start printing more money. How long can that go on? And do you see that the equity market's needing to decline before we see a real bull market in gold, or can they both go up together?
They can go up together for a while because the correlation between gold and the market, it's a negative one, but it's a bit of spurious one. I mean, it happens for a period of time. They can go up together or go down together. The strongest correlation, and it's like 90% plus, is really with the U.S. dollar. And so, tell me what the dollar is going to do in the next 6 months, and I'll tell you what the gold price will do. That, over time, is absolutely the strongest correlation.
Now, I know that you've looked at, in fact, I saw you on a video in London, I think with the Northern Miner. You were a speaker at some event that the Northern Miner put on, and you showed a chart that showed the Dow to Gold ratio. And I know I can remember very clearly 1980. I'm old enough to remember very well when our first mortgage was a 17.5% mortgage, and Paul Volcker slammed the brakes on the inflation, essentially, in the dollar. It became very strong later, but of course it was a weak dollar, and gold went up to $850. But there about that time, we saw the Dow fall to about that level, and you had a 1-to-1 ratio. We had a 1-to-1 ratio Dow to gold in the 1930s early on. Could you comment on that and why that might be important to keep an eye on?
I love that chart. I came up with it actually when I was writing my 1999 annual report. And like today, the gold were unloved. The gold price was down at $250 in those days after being $400 for like almost 20 years and being $800 in 1980. And I just, essentially put a chart up. And when you think about the Dow Gold Ratio, it's really the ratio of financial asset vis-a-vis hard assets over time. And when you look at that chart, it becomes really clear to you that there are, long period of time where you should be in financial assets, and there are shorter period of time, but very dramatic, when you should really be in hard asset. And also what you notice over 100 years is that, twice in 100 years, the ratio ended up at 1-to-1. And also, over time, the ratio increases simply because of economic expansion. So the first, sort of like top in 1929 was around 30 to 1. And then in 1999, when I wrote this thing, the ratio was 40 to 1. And it went, in 2011, it went all the way down to 6 to 1. When the gold price was 1,900 and the Dow was down at 7,000, I mean, it was 6 to 1. It's now over 19 to 1. And my view is that, when it takes 19 ounces of gold to buy 1 unit of the Dow, what would you rather own right now? And I think the answer is gold.
Yeah, it would look that way. And I'm wondering, you talked about the correlation of the dollar to gold. What is your read on the dollar, and are there some maybe what factors would play into your read on the dollar?
Well, my read on the dollar is that the Fed has stopped raising rates. It's in pause, so that's a tailwind for gold, negative for the dollar. All the tariffs that have been put in place by President Trump are very costly, and it will lead to inflation, and that's good for gold and not good for the dollar because it's going to go down. And then when you look at gold in all currencies, it's going up. So to me, what used to be headwinds for gold are now becoming all tailwinds, and the opposite for the dollar. So I'm actually quite bullish on gold this year. I think we're going to see easily $1,400 this year for gold. And but it's going to be like the slow battle, the monthly battle, because people don't believe. And until gold gets well over 1,400, the stocks are not going to move that much because people are sitting on the sideline. In their mind, the gold price has not done anything for 6 years because you go back to 2000, essentially 12. And the gold price came down from 1,900 to about 1,250, and it's been that way for 6.5 years, almost 7 years. But the reality is that the gold price actually bottomed in December 2015, and it's been going up for the past 2.5 years. Yeah. So when you look at the chart, it's quite bullish. Now it has to go through 1355 to really indicate that, this whole 6-7 year period is over. And I think we'll see that happen sometime in the next few months.
Michael Oliver, who I have on this show almost every week, is convinced with this momentum work that he does that we're there, that it's going to happen. His momentum work usually gets you in a little earlier and gets you out a little earlier. And he's convinced that it's a done deal, essentially. But that we do need to get above that 1355, 1360 area that you mentioned before the price chartists start to get excited about it. So I'm fingers crossed you're right, because I have a lot invested in gold, and of course this show is about gold to a great extent. Pierre, I'd like to ask you about some geopolitical events that are taking place, and if they might not have something to do with the future of gold as well. I think you touched on tariffs. That's part of the story. The battle with China and so forth that Donald Trump is engaged in. But what do you make of the massive buildup of gold in China and Russia? What do you think that's all about? Why would they be doing that?
Well, that's an easy answer. As we all know, gold is the only reserve currency that's not the debt of another country. So if you're one of the primary country in the world and you don't want to own U.S. debt, which is dollars, your only really other choice is gold. Because if you're Russia, do you really want to own renminbis or euros? You can own some euros, you can own some yen. But these currencies are not traded on, trillions of dollars a day like the U.S. dollar is, or gold for that matter. So the only other reserve currency that of choice is gold, and that's what we've been seeing. Central banks buying 4 or 5, last year 600 tons of gold, and that's going to continue for the foreseeable future because, the Chinese are saying, why we already have $3 trillion US dollars, and what is the US doing? They're hitting us over the head every which way. Let's diversify. And Russia, same thing. They don't want to have anything to do. They've sold all their U.S. dollar. They're using gold. And we're going to see, we're seeing Iran and Pakistan and other countries and Turkey doing exactly the same thing. So it's interesting because back in the 80s and the 90s, central banks were, huge sellers of gold. In fact, they're the one responsible for bringing the gold price down to its knees in 99 at 250, mainly the principal cost. Now they're doing exactly the opposite. I mean, they were selling gold at $250, $300, and now they're buying it at $1,300. Go figure.
Yeah, I think it's largely not necessarily the Western countries that are doing it, though, Pierre. I guess they're certainly not selling now as they were the Bank of England and other banks. But I just wonder because, the geopolitics come into play, it seems to me now. The U.S. has forbid the Bank of England, or at least the Bank of England has honored its request not to send gold back to the current regime in Venezuela. And I wonder what that impact that might have on people that countries that might not be all that friendly to the United States wanting to store their gold in England in the future.
Well, the gold may not leave England, but it's going to change hand anyway because, they can do a swap with, with Iran, for example, for, the ownership is going to change, but the gold is still going to be in the vault. So I don't make too much of that, to be candid. And if your vault is in Switzerland, the Swiss, they don't care. Whatever ownership it is. So the political event have usually a very short lifespan in terms of the gold price. So during the Iranian Revolution or the Iraq War, the gold price went up $20, $40, $60 in a day, but it came right back down.
Pierre,
I think, you have to focus really on the U.S. dollar and what you think, the policies of the current administration are doing to the U.S. dollar you really believe that gold's got a good run for this year.
Pierre, with just about 3 minutes left here, I want to ask you, if you were managing Franco Nevada now, or maybe to put the question another way, what do you look at when you want to invest in a company? I know that you are invested in, I believe you have some holdings, you have a holding in Orla Mining, which is a company that I follow in my newsletter. What are you looking for in investments in gold mining companies now? And could you comment a little bit on jurisdictions? Are there some areas that you would definitely not want to put money into?
Well, just for the record, Jay, I'm still chairman of the new Franco Nevada when we bought back the company in 2008 from Newmont, and we've grown it from $1 billion to $13 billion. So we're still very involved in buying royalties, and our best gold royalties are copper mine with gold byproduct because these mines are going to go on for 30, 40, 50 years. And in the case of Franco Nevada, the whole management team could go to Hawaii for the next 20 years and your dividend is secured. Why? Because of these long life assets. So when you ask me what I'm looking for long life asset. That is the holy grail of mining. And that's what we do in Franco Nevada. That's what we try to do in Orla. We just have discovered a new copper gold ore body in Panama. It's at this point 40 to 50 million ton, but the drills are still turning, the truth machine as I call them, and we'll see where it goes. But that's really the holy grail of if you want to ask me.
That sounds.
I'm very invested in Orla. I've put a lot of money in that company. We got top team of management. two really good ore body, one in Mexico that's being developed, and the one in Panama, we're still drilling it, but at some point will also be developed. And in this business, when you invest with great people with good assets, the cycle will turn, and you're going to make a lot of money.
And for sure, your royalty model too brings less risk, I would dare say, than owning shares in a regular company, in a regular mining company. So, as you said, you don't have to raise money all the time to stay alive.
Franco Nevada, probably with First Quantum coming into production, we have 30% growth this year, probably another 20% growth next year without having to spend a penny. And the business model, the royalty business model that we created, Jay, if you ask me, it's the best business model on the planet. Your first money is your last money, and then you get exposed to all the discoveries made by the operators of your property. And, we have about 350 properties, 10 million acres, and the best gold trend of this world. What does that mean? That means we're going to be lucky.
All right. Well, it sounds good. Thank you. We'll have to leave it go at that. Thank you so much, Pierre, for sharing your time with our listeners. It's greatly appreciated, and I hope we can do it again sometime.